So this is the kind of conversation I wanted to have a long time ago, but today I have the chance to have it. And I want to talk to you about the top 5 interest-only business loans for startups and fair credit small businesses. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's convo, I want to discuss the top 5 interest-only business loans for startups and fair credit small businesses. The thing is, when it comes to paying back a small business loan, a lot of companies have to decide whether or not they want to pay the full amount or they want to allocate their funds, only part of their funds, to paying the small business loan. Is because if you have a small business, right, chances are you have to constantly juggle liquidity issues. And the thing here is that if you're lucky enough to have an interest-only business loan, you can allocate part of the amount you would have paid to the business loan. You could allocate that to taking care of operational issues, right? So an interest-only business loan is a loan in which you only pay the interest for the first, say, 5 to 7 years or sometimes 10 years. And when the interest-only term is over, you will begin paying off the principal plus the interest, all right? And this type of business loan is best if you believe your income will be significantly higher in a few years. Let me give you an example. If you are just starting out in, let's say, in law or medicine or in accounting, it may work for you. Why? Because you need time to build a clientele, you need time to build a reputation, and you need time to start seeing the results of your hard work being shown in a profitable operation. And there are alternatives to interest-only business loans. For example, you can have a business line of credit or invoice factoring. And one thing that's very important is that if you are a startup or a fair credit small business, and an interest-only business loan can be a great opportunity for you. Again, going back to what I said earlier, it allows you to actually save some cash. And whether or not it is only right for your startup or established small businesses, it really depends upon your situation and, most important, your liquidity situation. And interest-only loans work for startups or established small businesses by lowering the monthly payments, by allowing the business owner to borrow more money, by helping to plan when it comes to fluctuating revenue. If you are in a seasonal sector, or your operations are cyclical, it's kind of cool to have an interest-only business loan so you can plan things ahead. One thing I want to say here is that there are things you need to watch out for. Make sure that you always think about prepayment penalties, very important. You need to plan for the principal because you're going to have to make a balloon payment at the end of the interest-only period. So you need to have some kind of cash ahead for that. And there are other options besides interest-only business loans. You can think about SBA loans, the Small Business Administration loans, or equipment loans, or even the LOC that I spoke about earlier, the business line of credit. Let me quickly talk to you about the benefits of interest-only loans. You have a cash flow flexibility. This is an important element for small businesses because you're able to plan your operations properly. You're able to understand what works and what doesn't work when it comes to launching new products or new services. Because you have the cash is there. You're not using the cash for business loan payments, right? So it's great for cash flow flexibility. It's also great for short-term loan strategy because if you're able to, let's say, as I said earlier, you start an accounting or a law agency or a law business, and you need time, you need things, you need time, you need 6 months to 1 year for things to mature, for people to know you in the industry. You need time to generate that kind of revenue. So as a short-term loan tactic, it's kind of cool to have an interest-only business loan in your arsenal, so you're able to plan ahead. There are drawbacks. You have less equity, and you might have a payment shock in terms of the balloon payments I was speaking about earlier. Okay, so this is very important. So now, before I get into the top five, I get into the actual rankings. Please check out this short video. It kind of acquaints you with our evaluation approach. We do have a strict and rigorous methodology when it comes to categorizing, reviewing, and listing business loans on this show, including interest-only business loans for startups and fair credit small businesses. Don't go anywhere. All right, number five, folks. Number five, we have Sutton Funding. Sutton Funding is pretty cool. Our score, 8.5/10. When it comes to interest-only business loans for startups and fair credit small businesses, this is a great company to actually work with. Why? Because they actually have a diversity of loans that we love. And let me kind of quickly give you the pros and cons here. The pros: convenient payment structure. We love that. And they have a strong reputation with a triple B, with a Better Business Bureau. They are rated actually A+, and they have been rated A+ for the last 7 years. That's fantastic, 7 to 10 years. And they have flexible repayment terms. The cons: they may require collateral, and you may receive telemarketer calls. In other words, they might actually sell your data to third party, to affiliates, to partners, and this is kind of something you need to think about. And in terms of the business loan types, they actually they run the whole gamut. All right. So you're talking about accounts receivable, business lines of credit, business term loans, commercial real estate finance. They also do equipment financing, hard money. They do merchant cash advance, MCA, merchant credit card processing, and SBA loans. And what we love here is that with Sutton Funding, you actually, as a business owner, you can use the money for a range of needs. They place no restrictions on how you use the money. You can use the money for business working capital, expansion, purchasing inventory or equipment, project financing, marketing, debt consolidation, and payroll. And they also allow you to use the funds to acquire another business if that works, if this is in sync with your business strategy. And what we also love is that with Sutton Funding, you're able to tap into expertise unparalleled in the industry. Why? Because this company has financial experts who can help you with tax returns, business plans, debt scheduling, and monthly burn rate analysis. Think about it. When was the last time you saw a business lender, help you with tax returns, with debt scheduling and monthly burn rate analysis? So Sutton Funding is pretty cool when it comes to that. So you have, and in terms of the requirements, the loan can go as high as 100,000, and they want a credit score of 600. They want you to be in business for a startup. They're okay, but for fair credit small businesses, they want you to be in business for at least 6 months. Number 4, we have here First Down Funding. Our score, 8.5/10. And this is a great company. In terms of the pros and cons, when it comes to interest-only business loans for startup and fair credit small business, this is another great player. First Down Funding. Pros and cons. Pros: you get a 24-hour approval. We love the celerity of the application process was fantastic. We love that. and no collateral required. This is pretty cool, especially if you're trying to shield your personal assets from your business operations, right? And you get fast funding, right? And the application is also very streamlined. And the drawbacks, they require for a fair credit established small businesses. They want you to be in business for 1 year at least. For startups, there's no problem. They understand that you're just new. And they actually also exclude from their loan guidelines certain industries. All right. And with first down funding, small and medium sized businesses often can have the whole 9 yards. In other words, the company can actually help you when it comes to purchasing new equipment, buying inventory, hiring more staff, or financing an advertising campaign. And the thing here is that they will work with you to make sure that the loans, the funding you require, help you in your business specifically. In other words, they'll bring their expertise in terms of the sector that you're in. They'll bring their expertise in terms of what your rivals are doing and kind of help you. And commercial loan options offered by First Down Funding include what they call spring funding, fixed funding, bridged funding, equipment funding, business line of credit, invoice and receivables funding. And the application process, as I said earlier, it's really fast. You can complete the entire process online in just a few steps. You submit the online application, and the company will evaluate your application. They will finalize. They might contact you with additional additional questions if need be, and they will finalize. And once they finalize, they will actually send you the money. You will receive the funding. And the industries they'll love at First Down Funding include retail, restaurants, salons and beauty, healthcare, hotel and motel, commercial truck funding, heavy equipment funding, automotive business funding, and gas station funding. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. I'm still having a convo with you about the top 5 interest-only business loans for startups and fair credit small businesses. I want to talk to you now about number 3. We have Funbox. Our score, 9/10. And Funbox, when it comes to interest-only business loans for startups and fair credit small businesses, here are the pros and cons. You get approved. You'll receive an approval decision rather in under 30 minutes. Pretty fast. Think about that. Half an hour. It just takes half an hour to receive an approval decision. And here is a platform that is startup friendly. And Funbox is part of what I call the fintech era. And they are a big player, a reputable player in that space. So that's pretty cool. And there are no origination fees when it comes to Funbox. All right. The cons, the major drawback here is that you would have to be making weekly payments. All right. And so Funbox has 2 different types of loan products for small businesses. So you have invoice financing and lines of credit. And loans range between 1,000 and 100,000. New businesses can qualify easily because Funbox has more flexible requirements when it comes to time in business and monthly revenue, and this makes a great option for B2B businesses as well as freelancers. All right, and the application is pretty straightforward. You have to register with your email and phone number, and then you follow the link. They'll send you a link, or you can go on the internet and click on the link and really sort of follow the whole process there. And if you are an established business, they want you to be in business for 6 months at least. They want to actually track 6 months of business transactions. They want you to have a business checking account and ideally $5,000 in monthly revenue. Now, the requirements for monthly revenue is kind of flexible. They have been known in the past to be very lenient on that end. So they will look at the totality of the criteria you're submitting to them, not just the one aspect, the monthly revenue. All right. And to apply, you should have comparable accounting or invoicing software with at least 3 months of ongoing activity, or a business bank account with at least 6 months of regular activity. And this is simply because the Funbox will actually analyze your accounting, the transactions in your accounting software, and will do the same thing with when it comes to your business bank account. Number two, folks, number two, when it comes to interest-only business loans for startup and fair credit small businesses, we have Fora Financial. Our score, 9.5 over 10. What we love with the Fora Financial is that there is no collateral required, and you get a 24-hour approval decision. And this turnaround is pretty cool, right? The cons, 1.1 to 4% origination fee, and factor rates are not disclosed on the website. We reached out to Fora Financial. We reached out several times, but we couldn't talk to someone to sort of explain to us the factor rates. So Fora Financial business loans make it easy to apply and qualify for a merchant cash advance or short-term loan between $5,000 and $500,000. And here is a lender who has a straightforward online application, and businesses can receive approval, as I just said before, in under 24 hours. This is pretty cool, all right? And the thing here is that Fora has done they've done some revamping on their business model and rebranding in the last few years, because originally they were called Paramount Merchant Funding. And so now they specialize primarily in merchant cash advances, so MCAs, and short-term loans, all right? And the thing here is that with Fora Financial, you can secure $5,000 up to $500,000 in loans, and the customers pay for the convenience, however, right? Because Fora Financial business loans come attached with fees that can cost 10 to 30% of the total loan. This is just good to know. And this can tack on 10 cents to 13 cents for every borrowed dollar, all right? So it's actually the cost oscillates between 10% and 13, not 30, between 10% and 13% of the total loan. It's pretty cool to know. And one thing I also want to see here when it comes to Fora Financial is that they do have great customer support. All right, they have been rated A+ by the Better Business Bureau, and which, a rating of A+, which attests really to the quality service you get with Fora Financial. And the repayment terms oscillates between 6 to 15 or 18 months. Number one, folks, when it comes to those interest-only business loans for startup and fair credit small businesses, number one, we have Toro. Our score, 10 over 10. This, in our view, folks, is the perfect player when it comes to the perfect lender when it comes to interest-only business loans for startups and fair credit small businesses. They are a business loan provider that is dedicated to helping others reach their professional business goals. And they've been around, even though they've been around for 5 years, they have grown to specialize in small businesses, new business, and even startup business funding. And they cater to the needs of individuals helping to jumpstart and expand their businesses. What we love with Toro is their algorithmic power. The fact that they are able to combine traditional banking analysis or underwriting analysis, right, with the whole fintech era. They're able to use algorithms, artificial intelligence, information systems to analyze applications and actually approve or deny them. And so the pros here is that you have fast approvals, availability of loans, flexible loan options, flexible terms, funding for startups, and they have great reviews. And in terms of the cons, this is a young company, right? So if you are kind of scared about the fact that they're young, you might want to think twice. But they're a young company and they have little information on fees and rates. And when you go to the website, it's kind of a little hard to find exactly what they are actually charging you. But this aspect can be taken care of pretty quickly if you just give them a call. Just give them a call. Don't be scared. Give them a call and inquire about all the information you need. And one thing I want to say here is that in terms of the amounts that they are actually financing, those amounts range from 25 grand to $250,000. So 25,000 to $250,000. And so once you apply for funding and are approved, you can withdraw the funds you need immediately to help your business's cash flow and continue to withdraw more as you need additional funds. And your monthly payments will be based on the amount you currently have borrowed, right? So as you pay off the loan or withdraw more money, your monthly payment will fluctuate. It really depends upon the balance you have. One thing I also need to say here in terms of Toro is that here is a company that is very lenient, very flexible in terms of application, and they will accept your application even if you have a credit score of 550. All right, so that's pretty cool. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. This is the final section. Thank you so much for your attention. I really appreciate it. I just want to quickly recap today's conversation. I was talking to you about the top 5 interest-only business loans for startups and fair credit small businesses. And number 1, we have Toro, 10 over 10. Number 2, we have Fora Financial. We have this is 9.5 over 10. Number 3, Funbox, 9 over 10. Number 4, First Down Funding. This is 8.5 over 10. And number 5, Sutton Funding. Our score 8.5 over 10. Thank you so much for your attention. Really appreciate it. I will see you next time. But until then, remember, stay marvelous.